Welcome to EdgeStocks.com. My name is Rob. Thank you for joining me. I just have a couple stocks today on the EdgeStocks program here from the CycleVision program. Stifel Financial is the first one. And as I've mentioned previously, often what we see when there are only a couple of stocks is that we're going to see a sideways or down market, one of the two. I've talked to you about this in the past, but let me talk to you a little bit more in detail about what this means in terms of the way you trade. If you like trading and you like the action that you get, then you don't need to worry about timing with the market. But what might happen from a money management perspective overall in the long term is if you time your trades with the market, where you get that extra boost from coming out of the hole, where you get the timing, you'll make more on those trades than you will on a market that's moving sideways. So if you just trade all the time, you might end up making the same amount over time. You will have taken more trades, of course. So a lot of it has to do with your personal style deciding. So I try to tell you what we see happening in the overall market over the next couple of days, and you use that to curtail a money management style that fits your own personality. And so it's up to you. Like, for example, the trades that we put out last Friday, it looks like a good percentage of those are already profitable, some of them up as much as 10% or so from what I could tell. But that doesn't mean that waiting for the next market upturn wouldn't be a more profitable strategy. Like I said, just work it out for whatever makes sense for your personal style. The first stock that we have today is Stifel Financial. We only have two stocks today, and I'm not really sure that I like the risk-reward profile that I see on these, and this is suggesting maybe that the market will be in a consolidation phase. We are up about 6 points right now on the S&P 500 so far today, and like I said, I didn't think that we'd be seeing higher ground necessarily, but kind of moving sideways here. But these are suggesting, in line with my prediction last Friday, that the market would be moving sideways over the next several days. Anyways, Stifel Financial, the risk-reward on this between the drawdown and the average trade is a ratio of about 0.69. And what that means is the maximum historical drawdown intra-trade that's ever occurred on that has been around 9%. With an average trade of about 6.22%. Now, in the past, this trade has had 100% winners, so you've never realized anything but a gain on the trade. So looking at the drawdown figure just gives us a feel for the kind of exposure that we might incur during the trade based on the past. And so if you're trading a portfolio, of course, you might look at that a little differently, a 9% drawdown. Than you would if you were trading a single issues. Now on our next stock, I will show you that the drawdown on that one is a little bit higher, and so unless you were trading in a portfolio, you might want to stay away from that particular stock. Now on Stifel Financial, we have a run up out of a low here, and have been consolidating for looks like a number of weeks, over a month or so. And so this is probably a fairly low risk opportunity. We are playing with the 20-period moving averages, and this is probably a good area to buy. Now, in order to pick up our 6% on this on a $55 stock, we only need to run up a couple dollars, which would be up into here. So there's plenty of room to do that. Let's go take a look at our next SRF. Oh, I'm sorry, SRZ is our next symbol. Sunrise Senior Living. Now this stock has been in a run-up for most of the year after having consolidated the latter part of last year, and has run up from around the $3 area up to the $5.50 area. So there's probably some good fundamentals behind this stock, trading on about 1 million shares here on average. So, but we have played with recent new highs, and so you might want to buy this one on a bit of a dip. We did recently play with the 20 period moving average yesterday. Had a good run in this stock, so if you could get into this one on a good price, that's a $5 stock, might be a fun play for you. And but the drawdown on this one, this is what I wanted to point out, is higher. Now 20% on a $5 stock, of course, is only about $1, which would risk it down into about the $4 range. So you would either allocate less to a stock like this and not make it as large of a portion of your portfolio, and just trade a few stocks, a few shares, a few hundred shares or something, to have fun with it. So anyways, that's all I have for today, just the two stocks. And I think if I take a look here, I'm probably seeing the market up. I'll give you more as we get closer, but we're probably looking for the market to start headed back up here in the next few days. So I will keep you posted on what I see on the overall market. In the meantime, that's all I have for today, and I'd like to thank you for joining me. I look forward to seeing you again real soon.